Welcome to Profile Traders. This is Reza and you're listening to my market analysis for June the 27th. It was yet another day extremely painful, as in the last report I very much so stated that the most important level to watch was near the low that we saw on that big day of a drop after the announcement of leaving UK was made, and that level was very much so right around 98-97. Last night, as we tried to rally a little bit, there was a big seller that came in at 22.5, rejected price, and we closed towards the middle of the range. At the time that we opened, we still had a 50-50 chance that from this middle point we would go for a test of the overnight high, but rather as soon as we opened, without any hesitation, we pushed, and within the first hour we did break that very important low that was put in near 1999-1988 level. And after we pushed it, we dropped very much so from 2011 to 1982 within the first hour and a half. So whenever you have such a drastic range, all of it in one side for an hour and a half of the open, chances are that you're gonna start to go rotational, because if you do not go rotational and if you continue this rate of a drop for the remainder of the day, then you would have had another 100 points drop in your hands, which was very unlikely. However, as we rotated towards the middle of the day, it was extremely important that the buyer that bought it from the low would be able to reject price back over 97.5, and if they were able to do that, then it was very likely that price could have come up to the open of today at 2011. The fact that they were unable to break it up above 97.5 created a late hour sell-off back to the very low of the day. Whenever you close at the very bottom extreme of the day, that's a very bad sign, because it's a total complete victory for the sellers. So at this stage in my book, until we remain below 1997, the sell-off will continue on the way down. Any given time that we break above 1997, very easily market can return back towards 2010, 2011. So now 1997 is the most important resistance above us from where we stand. Now, what kind of a downside projection we could have? The problem that we have is that this leg up was so one-sided, it was so parabolic to the upside, that the characteristic of moves that are so one-sided and so parabolic and doesn't give the other side an opportunity, but rather crushes everything on its way up, when it starts to unwind, it is very vulnerable to a very deep retracement. So now this whole leg that went on from this low here of 1780 all the way to 2100 is very much so subject to a deep retracement. So from a level point of view, we now need to target a round number which will be 1950. Once we get to 1950, if we do get to 1950, clearly the fact that we will have dropped from 2100 to 1950 should provide significant support to the market. And since this is now the very first leg down, this leg down should be and will be and could be subject to a retracement back up, so that a leg 2 retracement takes place. After that leg 2 retracement takes place, then the third leg down should be the destructive one. How? Like exactly here. When we dropped, this was a first leg down, then you had a second leg of a retracement, and then a third destructive leg down. But in such a market environment, you have to be very much so aware that everything will be news related. Market will react very, very responsively to the headlines that will come out of Europe. Do not doubt for a second that you are not going to see central banks, the Fed, all kind of intervention into the markets trying to contain these. So even though that the market is in a very severe short-term down move, you could be subject to very violent pullbacks against this move, as central bankers will try to intervene to save the market. But for now it is not looking good, and as long as we remain below 1997, next stop to the downside should be around 1950. Now let's look at crude. In the last report I also said we have to very carefully watch 4650. If this 4650 doesn't hold, the next level below would be 46 and then 44. We did break the 4650, we did drop to 46, but then we came up and closed inside 4650. Therefore now this should be and could be a very short-term bottom, because of the fact that the break below 4650 did not succeed and we managed to come close above it. If tomorrow morning we come in and we have not broken below today's low, I'm expecting a push up towards 47.40 first, and then there is potential that it could go for a test of $48 up there. At that point we will have to reevaluate the situation. But overall this was a little bit more bullish looking than ES, because ES closed at the very bottom of the day. This one closed very close to its high, and we failed to successfully break below 4650 since we closed, as you are seeing yourself, above that level. So if we come down for another test of that low, that 45.80 is now significantly important support, and if we test it again and we cannot break it, most likely outcome will be a push to the upside. If we don't come and test it at all and we want to continue up, you do have the two levels that you could be look for an upside objective, 47.4 to 48. This was Reza with Profile Traders. Thank you for listening. If you wish to learn market profile, check my website. You can get all my 5 courses, 1 year to my trading room membership for $675 unbeatable price. You also have money back guaranteed, and you have also 2 days free trial to the room if you wish to check it out. Have a good trading. See you next time.